Hi everyone. So 2 weeks have passed. As expected, these 2 weeks were quite interesting. We had a bounce, at least some people tend to call it a bounce. We'll see if Raphael has the same opinion as I have, but I don't think that this bounce is something worth talking about. Yeah, so today is two of us. I'm sure we have quite a few topics to cover today. So yeah, hi Rafael. So how these 2 weeks been for you, and what you see in the markets?
Hi, Vai. So, yeah, first of all, sorry, Raghav was supposed to join, but he had an emergency at work, so he couldn't join. The past 2 weeks were pretty slow for me. I mean, the good thing when you are not participating in bullshit is that you can take the time off. So let's have a look at what I see. I don't know if I will be as definitive as Vi, but I'm leaning towards his opinion that he will share. Let's see how to share. Hop. This one. Okay, we are back to the screen. Give me a sec just to set up. Okay, so as usual, we're gonna start with ES and NQ. So 2 weeks ago, I had a lot of triggers saying that if you wanted to play the dip, it was a nice a nice place to try it. I didn't. I tried twice and got stopped twice, if you remember. So I thought, okay, let's forget. Let's not try a third time. Maybe I should have anyway. So we got this bounce from all the buy signals that I got from my scripts. And basically all ES did and NQ did, I'm going to show you also NQ, is bounce, retest MFR trend, and we retest my vola trade. And so far, it's been rejecting it. Also, I think all of you have noticed that currently the upside downside ratios on almost everything is not looking great, to say the least. It's actually very bad. And same as 2 weeks ago, most assets, I mean, most equities are still bearish trend. So I'm focusing here on ES and NQ, but I will show you later some big cap stocks, and they are looking the same. It may seem impressive when you have a bounce, but you have to remember that before the bounce, we got the leg down. So so far, I'm not really interested in playing that. I'm still holding gold, and I mean, I'm happy to keep this one and not bothering myself with trying to get to play this bounce that is, in my opinion, not worth playing. Maybe the picture will be different in 2 weeks, but for now, it's a bit dangerous for me. So currently, what I'm looking at basically is very simple. We got the rejection of vola trade. We got the rejection of MFR trend. Also, in the same time, for those using my scripts, you have matrix here. The cycle daily is starting to roll over. So I want to see what happens when the matrix cycle down will have bottom, where we are in terms of ES and NQ, and of course all the big cap stocks where we are when the cycle is at the lowest here. I want to see, are we making a higher low, or are we breaking the lows? So that will be my main focus. I may try to buy the dip if I can see at least a higher low when the cycle of matrix is at the mean. But sure, there will be some other things to consider. But first, I want to see that. I'm going to jump over quickly to VIX because I think it's interesting to look at that while we are talking about ES and NQ. So 2 weeks ago, I had two scenarios in mind. One was to see VIX actually hold MFR trend, and we could see another squeeze in VIX. Another one was to actually start breaking back to neutral and confirming then the trend change by Wednesday back to bearish. So my favorite one was actually to hold MFR trend and to see another squeeze. But the market chose the other path. So the market did exactly the other path. Basically, on Thursday, we got the break back to bearish trend on the VIX. Hence, I mean, it's very simple, the bounce in equities. Something I mentioned also 2 weeks ago was the fact that looking at the volatility profile, so you can see here in blue, black, red, and green, they are basically the volatility of VIX. So blue is volatility of VIX, black is the trade of volatility of VIX, and green and red are the trend of volatility of VIX. And I mentioned that I was quite concerned for the past month, I mean, since October, November, about the volatility profile with trade that elevated, trend that elevated, and that it was actually quite good to see trade finally coming back down and approaching a trend. So in my opinion, again, I want to reiterate that volatility, in my opinion, is coming back to a much normal place from where we were the past, 6 months. Regarding the volatility of VIX, I would still expect trade, so this is a black, to go back down. There's a lot of room down to complete the usual cycle of volatility of VIX. So my opinion would be that actually this bounce should be faded. We shall see, maybe I'm wrong. And at the same time, you should be watching VIX to see the trade of volatility start to move back down. And when we start to reach the minimum targets that you can mark yourself, so mine is 22.4 and the other one 15.6. When we start to see trade, volatility trade getting to these levels, maybe we can start to think about a serious bounce. So this is something also to keep in mind. Good thing is VIX vola profile looks much more normal. Second, we still have room for volatility trade of VIX, so maybe wait for this one to get back down. So yeah, that would be my piece for the VIX. And also, yeah, regarding where we are with the matrix, you can see here, matrix cycle down has ended. We should have a matrix cycle up, meaning that you should start to see VIX actually go back up. So you want to consider, let's say you are considering buying equities, best would be to actually wait for the cycle up to complete on matrix on VIX, and then you can consider, okay, where we are when we are there. So yeah, something to keep in mind regarding ES and Q and VIX. Now let's go to the usual joke, Europe. So no trend break there. So DAX is still bullish. CAC is still bullish, which is very impressive considering what we have experienced in the US market. But same song as 2 weeks ago, same song as 1 month ago. So blue here, the volatility of DAX is still increasing. Volatility of DAX is increasing. For now, DAX is holding. So something has to give. I mean, either volatility will come down and will resume the crazy bull run again on DAX, and CAC is the same. Or finally, DAX and CAC are going to start to break down. So if you noticed, both DAX and CAC have actually downside cap on MFR. A cap is when in that case, downside cap is when normal low of the range equal long-term low of the range. So it's been like this for the past 10 days on CAC and DAX. So if you had to take a bet, the bet would be volatility will come back down on both. But yeah, for now I'm waiting. I'm actually interested to either get back in the CAC or maybe play the DAX. But for now, with volatility rising on both, here you can see CAC is the same. With volatility rising on both, I'd like to see actually this volatility go back down. Nikkei actually looks the same as the US. Vai has mentioned several times already in the past the relationship between the Nikkei and the tech sector in the US, and I think you can appreciate it visually here. So you got the same kind of setup with the bounce retest of my vola trade, but also of MFR trend, and so far the rejection. Okay, here you can see matrix cycle up as completed. So you should expect the cycle down to start. Okay, so let's say you want to buy the Nikkei, wait for it to make a higher low first to at least now consider all the signals. That would be my recommendation. DXY, so I mentioned also for this one 2 weeks ago that my opinion is that the dollar has bottom. Okay, so this is my opinion. Okay, I'm not 100% sure, but this is my opinion. I think the dollar has bottom. This is the main reason actually I exited my Euro USD long so a little over 2 weeks ago. I'm actually expecting this kind of pattern here. So I'm going to zoom a little bit. I'm expecting to see this kind of pattern here to materialize. So basically, we confirm the bottom is in, we got some kind of consolidation, and then the move will start. So I would encourage you to look at the volatility of DXY to confirm this move. So it will look like this. First, you will have volatility breaking volatility trade, and then you will have volatility trade to go down. So I will show you now where we are. So we are here. This is what I'm watching. I'm actually interested to go short Euro USD, but I need to see first this transition in terms of volatility. So my expectation would be maybe a retest of 103.50-ish on DXY, and then back up to where we are currently, some kind of consolidation, and then the real move to start. So let's see. That's what I'm looking for. So this is one trade I'm thinking about, short Euro USD. So let's see if this trade get put on within the next 2 weeks. So CL oil, 2 weeks ago, I said I had a buy on the 6th of March. I didn't take it because macro-wise, it's not worth trying. But yeah, surely you got the bounce. In my opinion, it's not time yet to short. I'm actually interested to look for shorting oil. But the way I would look at it is so considering again my volatility signal, I want to see two things. I want to see matrix cycle at extreme. Three things, sorry. This thing. Second, I'd like to see a sell signal actually when it happens. And third, I want to see this volatility in blue here below 2. Okay, that would be what I'm looking for. So you can see here we are quite high. A counter trend rally in oil is totally possible. We got one in December. Probably sucked many people in and then poo-poo. So I would be looking for this kind of move again. And I want to see the three things. So matrix cycle at the top, volatility below 2, and ideally a sell signal. And I will probably most probably short oil when it happens. Now my beloved gold. So we are actually approaching what I consider the final exit for this wonderful asset. So I exited some more at so I tweeted about it 3060. So we got filled on the 20th. And now we are really approaching the daily min 2. Let me zoom in again. So daily min 2 is 1.9. We are currently at 2. Okay, guys. So if you use the script, you mark those levels, and you know that when we start getting below daily min 2 and we are between daily min 2 and daily min 3, the top is about to take place. So I'm looking for two things before unloading this position for good. One, we need to be below, we need to see volatility trade below 1.9. This is the first thing I want to see. The second is I want to see matrix here at the top. So we should be near like 220. Okay. So I'm going to watch these two things. First, below 1.9. Second, I want to see matrix above 220. This is when I'm going to close my long position, my long goal position. Okay. And it doesn't matter to me if then maybe we have another 2 weeks or 1 month of move up, because I know the top will be in for several months. So I 100% expect a sell after we have reached those levels, and matrix also reached the level. Can take 2 weeks or a month after we get there. It doesn't matter to me. We will when we get this sell-off, there will be two paths. One path will be multi-month consolidation. So you will see this kind of thing. I can show you here. So basically you have vola increasing, and then for several months consolidate, and then we will see when we can take back another long. The second is actually a bear market in gold. Okay, so it doesn't matter to think about how it's going to look. Just have to know that this is what is going to happen. So I would encourage you to take profit when we are there. You can write because you have another method. It doesn't matter to me, but I'm going to exit the position. I'm going to show you also silver actually. So I have two min trade marked. So one is 3.9. We are currently at 4.4, so very close. And the other one is when you have like crazy bull run in silver. It's 1.9. You sure you can try to hold until we get there? It's up to you, but I won't. So same thing, I'm gonna watch, but it's gonna happen at the same time. I'm gonna watch for a trade of vola to get below 3.9 with matrix at the top, and it will probably happen at the same time as gold. I can show you historically, so you can have a look at what I mean. So this is the mean here, and you can see several times in the past, anytime we get near those levels, this is when we have a top, we have a sell, etc. So sure, it can keep going, right? It can keep going. But yeah, it doesn't last long after we start to reach those levels. Then let's go to crypto. So I'm going to talk about Bitcoin and Ethereum. So since the broke trend, nothing has changed. I mean, looks like crap. I mean, sure, you can, if you are like a long-term McDonald's worker, sorry, I meant long-term crypto investor, you can hold those assets for sure. But yeah, for now, I don't see the point. I don't see anything. I mean, it's bearish trend. Vola is quite elevated, so yeah, not very interested. If we start to see those kinds of value in volatility, so you can see here blue, maybe I could try if I get a buy, etc. I could try to take a shot, but for now it's just it's useless. I mean, there is no guarantee. It would be a gamble, and there's no point in doing that. Now I want to talk about yields. So 2 weeks ago I mentioned that so we got the trend break in I'm going to use the 10-year and the 30-year. So we got the trend break on both, and I was expecting actually to see yields, bonds, so TLT, DV, zeros, doesn't matter how you want to express, but to start to work. Especially we had the cross of trade and trend, but so far all we got was a counter trend rally in the 10-year and in the 30-year. So you can see here, this is the 10-year. It's probably gonna try to retest trend, and the 30-year, it's in there. So I'm gonna show you also TLT. So TLT also here, retesting. I think zeros and EDV are in the same. Yes, you can see it's absolutely the same picture. So either in the next 5 days, we are not going lower in yield in bonds. We are not going higher in yields, and we start to see the opposite move of what we are seeing for the past for this week. So basically, we need to hold here and start to get the other way around, or you have to expect that trend is gonna break again. That's as simple as this. So the next 5 days will be important if you are a bond holder. You need to see basically this where we are now. Hold. Sure, it can go to the lower band of the trend, but it should bounce in the next 5 days. TLT, DV, zeros. If they don't, trend break is about to happen, and you have to unload because this thing is gonna unravel fast. That's my opinion. And yeah, just for the fun, so I'm going to show you, NVIDIA still bearish. So I had all those beautiful buy signal. Pump went almost to MFR trend and my volatility trade, and Tesla went to vola trade going down. PLTR. So used to be Vaidotas' favorite stock, but see, same. Microsoft, absolutely horrendous. Google, I mean, this one was actually a very, very soft bounce. Meta, still bearish. Apple, still bearish. Amazon, still bearish. So anyway, I mean, sure, you are seeing this bounce and you are thinking, oh my God, I'm missing an opportunity, but you definitely aren't. Okay, just let me show you a bull market. This is a bull market, okay? This is how it looks. You enter here and you ride until there, okay? I mean, how does it look the same here? So you're making your life miserable. Best is to avoid. That would be my recommendation. Okay, I'm gonna stop share and you can go right.
Yeah, great as always. We have one question, and you were talking about bonds, and I think that maybe now is the time to touch on that. But when you're looking at a bond signals, so are you taking into consideration signals of macro uncertainty, some macro, what's going on in the politics or in the world, or what's your view? Because now we have some contradicting signals, and I agree on that. Because technically bonds are in a buy the dip mode, and because they're decent, and Trump is talking about that yields need to go down, and not only that, but at the same time we have this counter trend move, and like you said, we are quite close to the level where trend can break and so on. So the question is, where are you taking all these things into consideration, and what is your view on bonds in general? If you are only using signals, then yeah, but if you are not, what are your main combined views on bonds when you have all this information available? So signals, politics, macro, you name it.
Usually it's signals. I mean, signals, but when you want to see the crazy moves, sure, you need to have the macro behind you. I mean, I saw a tweet actually, and I kind of agree with that. The tweet was, bonds are not working because they work in recession. You know, it was the tweet. And I was like, yeah, it kind of
Yeah.
makes sense, you know. I mean, maybe that's why we can get some kind of consolidation and then the rip that we should have, because the signal is saying, okay, the potential is definitely there. It should do it, but it's not. So, so maybe that's a missing ingredient, a real slowdown, and yeah, so far, I mean, sure, I mean, it's pity that is not here, but I think the data for GDP is actually not good. It's quite negative. But bonds are not working, right? You have equity selling, bonds are still not working. You have bad GDP data, bonds are not working. So, I mean, the signals say next 5 days it bounce or get out of this thing. That's what the signal is saying. And like I said, this tweet actually made me. It's stupid, but it's deep at the same time. And it works when there is a recession. And maybe the data is not bad enough to justify the fact that despite the potential, it should ride, but it's not, right? So that's my view. What's yours?
Yeah, same for me, even though I read the stuff all the time about what's happening, especially in the US and macro and economic stuff and so on. But when it comes to trading, my worldview has nothing to do with trading. So we had this question. So my answer to that question is, yeah, literally, doesn't matter what I think. Doesn't matter what I think will happen or is happening in the world, and so I want to be in the position when a signal confirms that. For now, nothing has changed. Still, bonds are, in my opinion, in the buy the dip mode, but buy the dip mode. So, for someone who is not long already, we first need to see some sort of reversal before entering. But yeah, I totally agree. Okay, so I'll share my screen. Let's go to this. And for those who are monitoring upside downside ratio, which I always encourage people to do, both on regular term and longer term, but especially on regular term now. So for those who are monitoring upside downside ratios and all this bounce that was happening for the last, let's say, 2 weeks, shouldn't be surprised that now we have dips in the overall market. Well, not dip is a wrong word, but shouldn't be surprised that this bounce is not continuing, and now that we have these down days, and I still think that we will go to new lows, and all this thing is not over, but yeah, the signal is there. And why people shouldn't be surprised is, of course, upside downside ratios. And when we look at the upside downside ratios on a regular term basis, basically, yes, same happened here when we went down. Of course, the market was oversold in the short term, so we needed some bounce just because that's how prices move and how markets work in general. Nothing goes up or down in a straight line. But same applies to this bounce, which we had, because now we were literally touching top end of a range, never broke it, but we were literally touching top end of a range, and a couple of days ago, and our upside downside ratio was simply not there. And what's going on in the markets in general is definitely what our users should have expected to happen, because that's always what happens during bearish, especially during bearish trends. Like Raphael showed a perfect example of bull markets versus what's going on now, and clearly we are not in the strong bullish move now. Yeah, so QQQ basically touched the anchored VWAP from the highs that we had in February, and for now it was tick by tick, and now we have this another confirmation that for now sellers are in control, and no need to fight the tape, as smart traders tend to say, and I tend to believe that that's the case. If you want to fight the tape, just don't do that. Tape will always win. Yeah, but now what's actually going on in the markets, and let's talk about rotation a little bit. So for the last 5 days, things that were working best was XLY, XLP is decent, and when it comes to major indices, Dow Jones Industrial, of course, because that thing fell way less compared to other indices, because of its overall structure, and usually institutions are allocating into these mega big stocks all the time, so that shouldn't be surprised. But what I wanted to touch on is basically that the rotation to defensives in the short term is still happening. It's not ended, and keep that in mind. So we are definitely in the risk of environment, even in the short term, when we look at the signals. So for example, 5-day column, we still see that XLP is looking good. XLC in this scenario also, but look at XLU and look at XLP. That's my main advice, and I tend to watch XLU more, but I know Ted was talking about that multiple times, and others that XLP is also works quite well as an indicator. So, and yeah, even though for the last 5 days XLU was not working at all, but XLP outperformed the major indices, and yeah, especially even in this bounce, when it comes to 5-day returns, SPY is only up like 28 basis points. So momentum is not there. And now if we go to the spine, where I wanted to be, yeah, so literally we had a test of neutral area of the MFR trend, and also same situation with upside downside ratio. So my process is always the same. That if I am in a bearish trend, and upside downside ratio is deeply negative, so it means we are close to top end of the range. Well, the only way to play it, if you want to play it, is on the short side. So I choose option structures for that, and usually in this environment that we had, especially when the VIX was above 20 for quite some time, I was trading 0 DTs, because it was just letting me to manage risk better, and because usually in my day trading, when it comes to futures, my stops are very tight. Well, guess what? When VIX is above 20, tight stops will not work. So from risk management perspective, options gave me a lot more flexibility in that, because I still have limited risk. But even if we have whipsaws during intraday, it was still not a problem. But yeah, basically it's a short, and I still think that in April we will get new lows. So we will see what the market will do, and what signals will tell us. For now, all the signals are telling me that we will go to new lows, and that this bounce is without legs, as I wanted to mention. And of course, ranges are very important in this case. Monitor upside downside ratio. That's all I can suggest. Literally. When it comes to momentum scores, also we are nowhere close to being oversold. At the same time, in the short term, we are nowhere close to being overbought either. But I tend to give more weight in bearish trends to longer term numbers, and of course 30-day momentum is -1, which is nothing. It can go way lower and way faster. Of course, when it comes to momentum, keep in mind that if it goes down slow, I mean in a calm manner, just slowly going down, momentum will not accelerate a lot. So yeah. For it to become really oversold, we need quite a decent move for that. But yeah, SPY, when it comes to SPY, I really am thinking about the short position in that, and with targets that are lower than our current lows of these moves. Now, first, maybe I will touch on correlation, because of course correlation is always what I want to talk about. So this correlation matrix is currently 10-day correlation. It's currently a 10-day correlation, and on a 10-day correlation basis, let's first go to the SPY row, and we see that when it comes to equities and sectors, basically most of correlations, apart from maybe XLU, are quite high, but on average basis, we are also nowhere near to the excitement, because we have average sector correlation to the SPY, which is this number, it's at 0.67. Of course, it went up, but I always monitor this number just to understand the overall positioning of markets in a way that we are in a crowded trade or not. So on the down moves, if average correlation would be way higher, let's say 0.9 or so, I would say that we are close to capitulation. On the up moves, I would say that we are very close to excitement. But again, we are at higher levels than before, but nothing too high. So keep that in mind, that to whichever direction markets will go, the moves have a very high chance to continue. But if we change our look back to, let's say, very short period, which will be a 5-day, you will see a different story. And when I was monitoring the correlations today, while working and while trading, I noticed a couple of very interesting things about what's happening in the market. So short-term stock bond correlation is negative, which is still quite nice, and still give me just another signal that my view about bonds being in the buy the dip mode is still in play, and that nothing dramatic changed in the markets. So short-term stock-bond correlation is definitely something to watch. It's very, very important. But again, if we look at the SPY row, you will see things that I were talking about. And even though XLU was not working very well in the last days when it comes to returns, but just take a look at these correlations between SPY and XLP and SPY and XLU. So keep that in mind. Keep that in mind that if we are in the regime where if market continues to fall, overall market continues to fall, from the long-short perspective, long-short portfolio perspective, defensives are the assets that you want to have on the long side if you do that. Of course, keep in mind the correlations. That's the main point of my process for a reason, and that reason is that, yeah, of course, if everything will fall, you can't expect that XLP or XLU will rip high a lot. If it's a sell-off, it will also fall, but from the long-short perspective, you can easily expect that it will fall less, which is very important. And I really wanted to show you that because I found it very, very interesting. That because even in the short period, it usually doesn't look the way it looks now. This picture is not something that you see usually happening. So, and now maybe let's hide the, no, let's just move to another tab. So what I wanted to do, if we go to SPY XLU pair, and yeah, so I always look into the markets this way. It helps me to understand things more quickly before I do the full analysis. But look at it. SPY XLU, of course, spread, of course, had this bounce. It reached neutral area and now it's going down. And from the ranges perspective, if we take a look at the ranges, also downside is capped but very, very far away. And the regular term upside is almost not here compared to the downside, especially. I still think that things like XLU and XLP will outperform in the short term, and let's do XLP. Same. Today I was not looking at this spread, so we'll see how it looks. Yeah, this one looks even better, and no surprise because XLP actually performed way better than XLU this week. But short-term performance is not what I give a lot of weight. So that's why I'm always monitoring all defensives versus all cyclicals and so on. But yeah, because this spread fell quite a lot, and again, no surprise, it was at the top of a range. It failed to stay inside the trend area. And yeah, the regular term downside is not that far away. We are basically in the lower end of the range. So from what I see, upside downside ratio is slightly lower than 1, but we still have plenty of upsides of downside in the spread. So keep that in mind. Keep that in mind that we have absolutely zero signals that market is willing to go into risk-on environment. At least for now, I don't see that. And of course, the main goal, always the main goal of all these presentations is to give you access into my process, how I view markets and how I think of the markets. But of course, you need to keep in mind that the very important part is that I'm very reactive. So of course, if signals change, first of all, if signals change, I will tweet about it, but in one way or another. But if signal change, I'm not overthinking. Oh, signal changed. Okay, now we are in risk-on environment. So guess what? At least for now, I see absolutely zero reasons to believe that this bounce that happened in stonks that this bounce that happened in stocks, so QQQ was down like 13% or so. Now it's down like 10% or so. Okay, we had this bounce. I have for now zero reasons to believe that this bounce will play out like, okay, now we had a couple of down days and now we will rip. No, at least I don't think so. I don't think so. And yeah, even if you look at the longer term downside and say, yeah, but actually it's not a lot, and we have a lot of upside. Yeah, but it's still quite a lot because longer term downside is 445 on QQQ as an example. So keep that in mind. I believe regarding our trading view scripts that are available and will be available to users, I think that after my talk, Raphael will touch on that because I know that we have well, I would not call it issues, but yeah, we need to wait for some time before we can continue delivering the new scripts, especially Hearst Exponent. But yeah, these tools will be available, so we are sure about it. So stay tuned and yeah, Hearst Exponents are not low. Of course, they went down and they are not as low as high as we had them, but still, the trend of all major indices is quite strong. So keep that in mind. And that's again, when I view into all the signals, I use it as a combination of different signals to come up with one view. Again, it's just another reason for me to believe that we are nowhere near of reclaiming bullish regime, risk on, and new highs and so on. Of course, yeah, we'll see. But at least for April, my views are that we will get some down moves. So yeah, manage your risk. This is the update. I will only touch on bonds quickly, and because I know that that's important. For now, I have a view again that it's quite a good spot to be buying this dip. So if tomorrow we get some upside momentum, maybe I will even do that. We will see. But for those who wanted to buy bonds, actually Raphael gave a perfect example, and I absolutely agree with that. That if you buy bonds now, which in my opinion is quite a decent spot to buy bonds now, be very reactive. It means now you have a cheap trade. What I call cheap trade, it means that your stop is relatively close to compared to your upside targets or where you want to be, and especially if you want to hold for longer term. So maybe you don't have things like profit targets or something, but the trade is cheap because basically what you have to do if you buy bonds now, if it goes somewhere here, just get out. Just get out. Don't make the mistake people make very often, and don't hold dads. Don't hold dads. Doesn't matter what you think about Descent, Trump, geopolitics, macroeconomics, US, anything. If a trade is not working, believe me, one thing for sure, you will be able to re-enter that trade at a better place. Don't hold back. But with that in mind, I think that bonds are at a decent spot to try a trade. Yeah, so that's it from me. And I think now you can touch on the trading view situation, what's happening there.
Yeah, so I think those who follow me on Twitter, they know I hate the moderators from TradingView. Their new policy is very difficult to deal with. So, for instance, most of our scripts are actually visible on our TradingView page, and we can open access for sure. The problem is we have maybe half of our scripts we had to post in hidden mode because they changed their policy regarding, let's say, pro account who have a side business and post scripts on their platform. So they didn't remove the older ones, but all the new ones we had to publish in hidden mode. So it's not good for marketing, but this is the way it's done. And I posted the two new ones Vai created. I think it was 2 weeks ago. But 1 week later, and it was going fine. I used ChatGPT and Grok to do the description. I asked, can you do so that it goes through the guidelines of TradingView? So I was very sure, we are good. And 1 week later, they struck those two scripts. They send us a warning, say you are unable to post script for the next 2 days. And so I replied to them. I say, guys, I use Grok and ChatGPT to generate literally according to your guidelines, and you still strike us. So I have to repost again. So I posted in both in hidden, but because it takes time to add users manually one by one to get access to those scripts, I'm gonna wait just to see if they try to strike those scripts even in hidden mode. Okay, so I am unfortunately asking for your patience. I posted them, I think, 2 days ago, Vi. So in 5 days, if they didn't strike them again, despite the fact that they are in hidden mode because they are lunatics, I will open those scripts again to our elite users. So I want to say I'm very sorry about that, but unfortunately, it's not under my control.
Yeah, thanks for that. I don't know if we have any questions, we can touch on that. If not, we can keep the show shorter than usual, and I think our viewers will appreciate that because sometimes we tend to rant a lot, especially I tend to rant a lot. So
don't worry. No, I don't see any questions in YouTube. If you have any, guys, now is the time. If not, then we will wrap it up. And you can always send us a question either by email to our MFR email or by Twitter. We always reply every question, sorry. But yeah, nothing. I see nothing.
yeah, so I'm sure that now we say it in the end of every show, but well, that's the world we live in. I'm sure the next 2 weeks will be interesting.
Yeah. Don't lose your charts, guys.
Oh yeah, absolutely.
There will be a
Yeah,
bull market again in equities very soon.
Yeah, so as always, risk management is most important, at least in my process. But yeah, my view is we'll see how it plays out. And of course, I'm not holding too much risk overnight, and I'm reacting every single day. But my view is that this bounce is not something you need to be really excited about. And we'll see. I'm sure in 2 weeks we will have an answer whether market has the same opinion or not. But I think that this overall bounce that we had, and it wasn't just a counter trend move before the next leg down. So we will see. But as always, follow the signal and follow the process. Don't follow your opinions or my opinions or tweets or something. For now, we have all cards in our hands. It means the upside downside ratio is not good for bulls. We have bearish trend. We have negative momentums that are not oversold, which again good for bears. We have correlations signaling also that we are in the risk off environment. So it's not often that we have all things aligned. So that's why I'm thinking the way I think. But like I said, follow the signals. Signals tend to change. So yeah, don't do things just because you think something will happen in politics or economics or layoffs, whatever. See what market is doing and follow the process. Yeah, so if we don't have any questions, then yeah, I wish everyone have you have great upcoming 2 weeks. Hopefully, we'll be there in 2 weeks from now. So thanks everyone for joining. Thanks, Raphael, and goodbye.
Yeah, thank you, Vai. And in 2 weeks, Ted shall be back, and maybe we will have Matt or Raghav with us. Take care, guys. See you in 2 weeks. Bye bye.
Bye bye.
Okay.